everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that there's risk involved with each trade that you take. You want to manage risk in a way that makes sense for you. And if we get a chance to go through some trade simulations, we'll utilize the tools that are built into our WebTrader and app that help to make the risk management side of things easy as you're setting up your trades. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our WebTrader platform in the upper right corner. That allows you to trade on both the MT4 and MT5 accounts, but with the advanced functionalities such as the free signals, the economic calendar, market buzz, with the news feed coming in for each instrument. So all of those tools are available when you trade from our WebTrader as well as from our app. You can find our app in the major app stores, regardless of the operating system of your mobile device or devices. And the same functionalities and tools will be available in the app as you see in the WebTrader. Now, if we log in here in the upper right corner from our website, we'll be in the WebTrader platform. Now, our focus today is on fundamental news. Obviously, we'll take a look at the technicals in terms of entry points and exit points as well. But we want to first focus on maybe some of the tools that'll give you an idea maybe of which way the wind is blowing, so to speak, with the instruments that you choose to trade on. Maybe you find that you feel like you have an advantage choosing to trade in a certain direction on different instruments based on what you know about the fundamental news. One thing I can show you for sure is that we have some announcements coming up today and tomorrow that in the past have lended some predictability to the movements based on how the announcements come in. And so if we go to our economic calendar, we can analyze the past movements from important announcements that are coming in today and tomorrow to understand that based on how the announcements came in the past, that can help dictate maybe your decisions on how you will trade with the current announcements as the numbers come in. So what we can do is choose the date range first, and I'll pick just today starting out, and we'll go to announcements that haven't occurred yet. And if you haven't used this economic calendar in the past, you probably want to personalize it a bit, pick the level of importance that you want for the announcements. The low-level announcements I tend to leave off. Also pick the countries that you're most interested in trading on. Usually it's the larger economy countries that we're interested in, the G7, European Union, etc. And then we're jumping to the announcements that you, number one, might be available to pay attention to in your schedule so that you can actually watch the numbers come in and be available to react to how those numbers come in with the strategy that we're about to go over. And I always suggest the weekend before, you can go through the upcoming week and find which announcements have had high predictability in the past based on the numbers coming in, and then that can help you make a decision as to what to do moving forward. So we've got the European Central Bank interest rate decision coming in just a little while. It's expected that the interest rate will be lowered, okay? And so if we take a look at what has happened in the past with the rate decisions, in general, a currency tends to weaken if there's an anticipation of a rate cut. And we've already seen that today. The euro has been dropping against the USD, likely because there's anticipation of a rate cut. Now, if we take a look then at what has happened in the past, usually these come in as expected, right? So if there's an expected certain amount of rate cut, in this case it looks like 0.25%, usually that's the way it comes in. But we can look in the past and see for the interest rate decision what has happened. How many have come in above forecast? None. In the past year or so of data. How many have come in below forecast? None. So as I was saying, typically they come in as expected. In this case, it's expected to be a rate cut. And so if it comes in matching the forecast, it looks like it's 50-50 movement. Sometimes it goes up, sometimes it goes down. So this particular announcement, when I look at it, and rate decisions are typically like this, it doesn't lend to it predictability as to which way will the movement go after the numbers come in. And one might think that, hey, if they cut the rate, when that rate cut comes in, the euro should weaken. The problem with that thinking many times is the price movement is already cooked in by the time the numbers come, meaning the euro's already been dropping, and maybe for other reasons, but also I would surmise the euro's been weakening today in expectation of the rate cut. So if the rate cut comes in as expected, do we expect, based on the past times that the rate decision has come in as expected, do we expect a large movement up or down? And what that data just showed us was half the time it went up and half the time it went down. So this is an announcement I'm not in particular looking to trade on as it comes in. I probably would be looking to have traded already on these movements dropping as it leads up to this announcement. And that's what it's already done over the past, let's say, a couple days. Okay. So let's move on and take a look maybe at some other announcements. The US has PPI data coming in. So maybe we'll look at the year-over-year numbers. This is a peek at inflationary data, okay, the producer price index. And so those producer prices are then passed on to consumers. And so if it shows an increase in producer price production from 2.4 to 2.6, that's already kind of a bullish idea for the US dollar, that the numbers are coming in with an increase in demand. And if it comes in even higher than that, or if it misses and comes in lower, what can we expect to have happen? And so let's take a look what's happened in the past with this announcement. And we can choose any currency pairing with the country's currency in question. In this case, it's the USD, so we could do any US dollar pairing. I'll leave it on Euro USD, and we can look at different time frames after the announcement. I'll leave it on 4 hours after the event for now. So if we're going to take a look at if this came in above forecast, showing higher inflationary numbers than expected, what might happen? Okay, not a big reaction in the past, 60-40. It's almost 50-50. Twice it went down, 3 times it went up. Okay, 2 to 3. It's as close to 50-50 as you can get with an odd number, right? So 3 went up and 2 went down. What if this comes in below forecast? We see a more significant reaction statistically. There were 3 events, and all 3 times the euro went up against the USD. So if the inflationary data comes in below expectation, it looks like a strong trend in the past for the USD to weaken against the euro, okay, for the euro to climb against the USD. So going into this announcement, I would probably be hoping that this comes in below forecast so that I can try and take advantage of what has happened 3 out of 3 times in the past and try and maybe go long on this if I get an entry point that I like. I'd be expecting about 30 pip range movement in the 4 hours after the event. And in the first, let's say, 5 minutes, it shows less than 10 pips movement, range movement. And one of them even went down. So if I could get in this zone on these 3 moves, after 4 hours, it looks like I would have been profitable on all 3 of them. Okay, so it's not like the numbers come in and the movement occurs immediately. Okay, you can expect from the past a 30 pip range movement, and in the first 5 minutes, even a false move down or a small movement up, less than 10 pip range movement. And after 4 hours, it looks like if this comes in below forecast, statistically speaking, you might have an advantage to think about buying. But you have to look at entry point and how certain you are personally as a trader with these statistics. Okay, so this is an example of one that I would be interested in, but only in the one direction. If this comes in above forecast, this 50-50 movement, 2 down, 3 up, it doesn't interest me as much. It might you, but you make up your own mind as you look at the data to see what's happening with it. We also have initial jobless claims coming in. And there's been a focus on the jobs numbers out of the US. So we might take a look at this. If it came in above forecast, 2/3 of the time, the USD strengthened. If it comes in below forecast, 2/3 of the time, the euro strengthened, went up 4 times and down 3 times. Not a huge statistical significance in terms of distance, because some of these that went up really small. 2 of them barely went up. And the ones that went down bigger. So as you analyze the percentages, you also have to look at the distance movement in the different directions. And this one strikes me as more 50-50, and I'm not so interested in it. Okay, the above forecast looked similar to me, with 1 going up and 2 going down. Okay, so with this one, I'm probably ignoring the jobless claims, and I'm focusing more on the PPI data year over year. Those numbers come in at the same time, by the way. So I might focus on this one more than the other one, which looked more 50-50. Okay, and we can go to other countries. We can look at other days. Now, if we go into tomorrow, there certainly are some announcements that could be advantageous to try and trade on or present some opportunities. We've got GDP numbers coming in out of Great Britain. And if we look at this, if the GDP numbers come in above forecast, the numbers are 50-50 here. Half the time it goes up, half the time it goes down. If they come in below forecast, there's where we see a huge statistical advantage to go with the USD against the pound. Okay, so better than expected numbers on GDP out of Great Britain. The pound didn't strengthen so much. But worse than expected numbers, below forecast on GDP numbers, all of a sudden 80% of the time, the pound drops against the USD. So I'd be looking in this case for these numbers, if they come in below forecast, to try and find an entry point to take advantage of this 31 pip plus range movement in the hours following the announcement, with a relative certainty of 80% based on the past movements that it might end up down after a few hours. Okay, and if we look in the first 5 minutes, okay, they were down, but much less. 12 pip range movement instead of 30, and one of them spiked up even. Okay, so you can take a look at entry points that you might want, distances to stop loss, and to take profit based on what's the range movements that occurred in the minutes and hours following the past announcements for GDP. Okay, so I would have a plan probably for this if it comes in below forecast to try and get an entry point. If it spiked up, perhaps like this one, to try and get an entry point, or if it went down only a little bit, to try and get an entry point to go in the direction that the statistics show 80% of the time in this case, that after 4 hours, the movements have ended up the majority of the time. And you're certainly not going to win every trade you take with these strategies, but if you try these announcements for GDP, for example, and PPI numbers and et cetera, and you try each one, these are repetitive numbers that come in each week, each month. And you try each one 5 or 10 times with the strategy like this, and you find that you're winning more than you're losing, then that's a strategy you might employ long term. Okay, and each trader is going to vary on their strategy of exactly what they're looking for to enter into the move, and where they might carry the trade to get out. So not everyone's success will be the same, but you certainly can see the statistical advantages from the past with certain announcements in certain directions, depending on how the numbers came in. We've also got out of Germany trade balance numbers, industrial production out of the European area. So if we look at this industrial production, if this comes in above forecast, look at that, 100%, the euro strengthens. Industrial production seems to be a focus out of the Eurozone in terms of these statistics. It's a pretty strong result. 3 out of 3 climbing after 4 hours if this comes in above forecast. If it comes in below forecast, it's more like 50-50. There certainly wasn't a lot of dropping, but the climbs were not large either compared to the drops, and it was as close to 50-50 as you can get 4 to 3 when you have 7 total data points. So If this comes in below forecast, not so interested in this case because the statistics are close to 50-50, but if it comes in above forecast, I'm looking to find an entry point to maybe buy on this. And in the first 5 minutes, we can see one of them even went down. Okay, and the ones that went up, look how small the range movement was. Overall range movement, a little less than 3.5 pips. Okay, 3.45 pips. So from 3 pips to after 4 hours, all of them were up an average range of 26 pips, with the largest one being up over 30 pips. And if you caught the one that spiked down as well in the first 5 minutes, you've got an even nicer climb to realize after the 4 hours. So you can go through the statistics from the past, pick the announcements and the direction of the announcements you'd be interested in, depending how the numbers come in, and have a plan ready to go and just act robotically, already knowing the distance you would have for take profit, stop loss, what entry spot you're looking for, etc., based on the past movements. And what we call this is data-driven trading. It's trading that's not based on emotions, it's not based on guessing, it's trading that's based on the past statistics and how the fundamental news announcements come in real time. Okay, I'll pause for a moment. Any questions, comments on the strategy concept that we just went over? Okay, and if I see any questions come in, I'll address them as I see them. Okay, where else can we go for fundamental analysis within our platform and our app? A simple place would be our news feed, which is here. You just click on news, and it has the latest news summarized and by grouping, basically. So pre-European market brief, you can read through the summary of what's going on, and it also recommends instruments that are related to the news that you might trade on. In this case, crude oil and gold, some news that came in that might affect those. And it's not the only instruments that this news would affect, but it's some recommendations. Hong Kong's Hang Seng index stable after 2-session decline. You can read about that and see, obviously it makes sense, the Hong Kong 50 might be of interest to you with that news. And so quick summaries that can give you quick news briefs for fundamental news. You also can go to our Market Buzz for news. This is where you, instead of reading summaries about it, can actually read the news yourself and see what exactly is going on. So we've got the categories up here. You can switch between stocks, cryptos, if they're available in your region, currencies, commodities, indices, whatever you might be interested in trading on. And so the larger the circle in the pictogram, the more we've found information buzzing online about that instrument, okay? And so we can go to any instrument we want and see a trend analysis. This is the technical analysis, basically signal. Price may rise 5%, 5.3%. You can click on it and get the breakdown of the support and resistance levels, the spot where you might take profit, these green lines in this case up here. The pivot line is the blue line. And if it breaks below there, then they're recommending further downside sell positions if it were to break below the pivot line. As long as it's still above, it's a buy signal until it might reach the take profit zone up here. Okay, so you've got the technical analysis there, but you also have the fundamental news along the news feed over here to see, okay, does the news back up the trend analysis, the technical analysis? So, you know, maybe this signal looks very nice, but you look over here and you find that there are articles talking really bad about something that just happened for Apple, then maybe you decide not to follow that signal based on the fundamental news, or the opposite. Maybe you find some articles that are time-stamped in the most recent hours that are talking about good news for Apple in this case. And if that was the case, then maybe you trust the signal even more. And you wait for the market to open and see if there's a price you like. See if on the small candles, maybe it's uptrending and not breaking that support level, etc. So you combine the technical analysis and your entry point with what do you think the most recent news is telling you. And you know, if you see an article that you're interested in, then you click on the link, and that brings up a summary of the article. And if you want the whole article, you just click Story Continues, and it'll take you to the website that article is found, and you can read the whole article yourself. And so very useful tool to find information very quickly about any instrument that you might be interested in trading on. Okay, so rather than taking hours to search through news websites and search engines to try and find the latest information and news, you can look right here and see what has been pulled up within the market buzz about whatever instrument you might be interested in trading on. Okay, we saw that the Euro USD, we could go through an example of something that might interest you. We saw that the Euro USD is indeed having some news that's coming in, an expected rate cut out of the European Union. And so, first of all, we could look and see, is there a signal on the Euro USD? Because a rate cut might lend the thought that, hey, maybe the Euro could be dropping. Let's look at the signal. And indeed, it's a sell signal. Now, like I said, a lot of times the movement that's expected from something like a rate cut, a lot of times that happens leading up to the rate cut because the expectation is there that there will be a cut. Okay, so we see that already. We see it was a sell signal. Here's the pivot line. It tried to break above it, but did not, and down it went with the sell signal, and it has not yet reached the take profit zone, but it's close. Okay, so this is a live signal that you could think about selling on if indeed you're looking to do that. But understand, we're getting close to the announcement now, and perhaps there could be a rebound the other way once the rate decision comes in. Okay, because maybe the movement, as we see the sell signal, has already occurred downward leading up to the announcement. Something to keep in mind. It doesn't mean it couldn't drop further with a rate cut, or maybe they come in with a larger rate cut than expected. If that was the case, you might see a rapid movement further down on the Euro USD because a larger rate cut than expectation, not always, but many times leads to bearishness on a currency, weakness on a currency if you lower the interest rate more than expected. But we'll see what happens here. What you could do is see if this pulls back up now before the announcement and maybe gives you a better entry point to short. But it is a live sell signal. It has not reached the take profit zone. And if we look at the live chart, then we could come up with an idea as to if you're still interested in acting on this signal or not. I'm just trying to get the chart to load. Let me refresh the screen. Maybe that'll help. There's Euro USD. Okay, so Euro USD, if I take a look at, let's get off the one-day candles and maybe I look at something different. 1 second. Okay, so if I'm looking at 1 hour candles, I can see downtrend, right, leading up to this rate decision. And this isn't just today, this is since the start of the week. Okay, we see a downtrend. So this is what I mean by sometimes the price movement is cooked in before the announcement actually comes. A rate decision is a pretty big deal. Cutting interest rates for the US as well weakened the US as well with some of the recent rate cuts, but then it rebounded. There's an expectation the US will cut an interest rate again, at least one more cut before the end of the year. Okay, that's expected out of the US now. So there's no guarantee they will, but that's the expectation. So if the euro already weakened with this rate cut expectation today, once that's over, now we're looking forward to the US rate cut. And so if this weakened before the rate cut decision, then perhaps the USD weakens before its rate cut decision, and this could work its way back up. Okay, so the short-term signal was to sell. And certainly that was a solid signal. It's been dropping. The longer-term move, fundamentally speaking, when we start to consider the US rate cut decision that's pending, might be, as this rate cut decision comes in, to take advantage of all this dropping on the Euro USD. Not that you couldn't do the short-term signal to sell. Getting in a little late on that, because It's already dropped near the take profit zone. But in the short term, certainly this could continue to drop. In the long term, longer term, the fundamentals might push you the other way. So if you start to draw a support level on, say, 4-hour candles or one-day candles, while you might be selling in the short term, the US rate cut decision that's expected to come in the coming weeks might send you the other direction on this move. Okay, so let's get rid of this downtrend. And what we can start to do is say, where's the resistance level up here? Technically speaking, I see a resistance level around 106, okay, give or take. It's about 106 right there. Resistance, down, tested and right back down, hits it again and drops. So if I'm buying on the bigger picture, I can be selling on the short term, no problem. Bigger picture, I might be looking at a buy here. So if I'm buying on the longer term fundamental news that US is the next to cut its rate, maybe after the European Union does today, this could start to reverse as it leads up to that rate cut then. Okay, many times they say trade the rumor, sell the fact. So in this case, if you were selling the rumor that the European Union was going to cut its interest rate, you've already profited. Now you get out of it before they actually do it. Now the rumor will be US is going to cut their interest rate. So maybe you go with the US to weaken before they do it. In this case, buy the rumor and then sell the fact once it reaches. That doesn't always work as a strategy, but we do see that many times with rate cut decisions. So I'm going to employ that strategy. Take advantage of the weakening, the weakening euro that allowed the USD to pull it down further, leading up to today's rate cut in the European Union, expected rate cut. If it comes in as expected, then maybe the US pending rate cut that could potentially happen then reverses this movement. So now we can do our risk management. So I can say take profit somewhere up around here, maybe 105.90 before the 116 resist or 106 resistance. So 105.90. Okay, what would I have to risk to my stop loss to get below this support level down here? Okay, I can start to identify where exactly would I see a support level. I think this is a pretty good spot where it hit once and bounced. It tested it, broke below and came back above, found support here again, 2, 3, 4 times. As long as it doesn't drop below 104.59, maybe I stay with it. So limited risk, 104, let's say 55. Okay, so I'm going after a potential profit of over 13,000, risking about 7,000. So almost 2 to 1 potential profit to risk. Now I need to adjust my trade size for that technical setup. Okay, stop loss is down here below the support level by a little bit. 104.55 is about there. Okay, take profit is just before the resistance up here. Now with that setup, direction is based on bigger fundamental news coming out of the US after the rate cut decision, whether they cut it or not in the European Union today. After this large downtrend, maybe expecting the opposite leading up to the US rate cut decision. So then we're looking at adjusting trade size to be the amount of risk that you're comfortable with. So if I do one lot, I'm risking below 500, which is less than 1% of my account, to try and make over 800. Maybe I can go a little larger if I want to risk, say, 1% of my account. 1.2, that gets me to about 1%, a little less. 1.25, 1 1/4 lots, risks about 1% of my account. Now you can risk the percentage you want, okay? You should have an amount in mind though that you're comfortable risking. And then once you have that set, now I can go ahead and enact my trade and I have my risk management under control. I know that I'm risking around 600, I'm looking to make about 1,000 on this trade. I'm in the direction of what I think the greater fundamental news might move it in terms of rate decisions, trying to take advantage of the weakening euro leading up to the expected rate cut today, and and also then going in the opposite direction with the expected rate cut out of the US being the next big rate cut news. Okay, so trying to read the tea leaves here as to why there was a downtrend on the euro, expected rate cut, and now why you think it would go back up with today's rate cut coming in, because now there's an expected rate cut out of the US next after today's rate cut decision in the European Union. Okay, now what could blow this whole plan out of the water would be if the rate decision is different than expected. Okay, we're banking that it'll come in as expected, because every time in the recent history, that's what's happened. Now, if it comes in and they cut the rate further than expected, instead of 0.25%, they cut it 0.5%, then we could see the euro drop and this trade go bad. But if it comes in as expected or no rate cut at all, we would probably see the euro strengthen along those lines. Okay. We'll see though. There's no guarantee with anything, which is why we risk manage. But we're trying to go in the direction of the fundamental news as we see it. Okay, and that's the strategy that we employed here. So this is a preemptive trade then before the announcement comes, whereas some of those other announcements that we looked at, we're waiting for them to come in, because based on the past announcements, we could then predict which way to go after we see the numbers. Okay, so we've put a spin on the economic calendar with this trade example. We're trading before the announcements come in. Okay, trying to take advantage of entry point. The other strategy was you get to look at the numbers come in, and in the past, maybe the first 5 minutes there wasn't a big move yet, but after 4 hours there was. Okay. Again, if there are any questions, comments, please at any time you can ask them. Maybe I'll ask, are there any instruments that you would like to look at right now? I'll pause and see if any pop up. Okay, and so, one instrument that has been interesting has been gold. And we'll just take a quick peek before we call it quits for the session. So we see gold has climbed up to a resistance level here. Okay, it's a pretty clear resistance level. This one dropped a little sooner than that. Okay, then up it came again, same price area, and dropped. And here we are again, hit this price level and pushed down once again. Okay, so some of what we're looking at is more data coming out today out of the US. The PPI data and some of the jobs information that's coming out could be the impetus to decide whether it will break this resistance level here or not. With the expected rate cut to come still in the US, gold has made a climb up. Okay, the expectation is there will be a rate cut. Perhaps that continues to allow gold to climb further. If we go to larger candles, what we can see is that we are not at the all-time high. Okay, the all-time high on gold is up here, almost 2,800, 2,793 or so. And so if this breaks this resistance level here, maybe with the numbers that come in out of the US today, anticipation about rate cut in the US, which tends to weaken a currency and cause inflation, gold being an inflationary safe haven, a rate cut on the USD and a potential weakening US dollar could be the impetus for gold to break this resistance and head towards the next resistance level, which would be the all-time high. We're looking another, $80 or so climb to get to the next resistance level. So we see what happened the last time it hit this resistance level, right back down. So there are a couple ways you could play this. You could do a sell with a very small risk to have your stop loss above this resistance level and take a short on this right now with a much larger potential profit, maybe to one of these support levels down here. And at the same time, you could back that up that if it does break the resistance and hit the stop loss on your sell, you could have a buy pending order up here, that then would have a take profit at the next resistance level. So kind of a hedge setup where if you sell with the current downtrend off this resistance and hope that it does the same thing it did last time, and if it breaks above and hits your stop loss, then you got to buy pending order to go with the momentum to the next resistance level up. That could be a setup that could make sense with gold right now. We just don't know how those numbers will come in necessarily out of the US today. With the short-term momentum, gold certainly could push down in the short term, but still then go up with the rate decision in the coming weeks out of the US, go up and break this resistance at the same time. Okay, again, short-term moves sometimes go one way, and longer-term, more patient moves can go the other direction. All right. All right, everybody, I think it's a good place to stop. Thank you for joining. Good luck with your trading the rest of the week, and my next session will be next week on Wednesday evening, 6 p.m. UK time, with a technical analysis focused webinar. All right, everybody, thanks for joining. Bye for now.